Hello everyone, how's it going? In this video, we're going to talk about Mullen, trading under the ticker symbol MULN. So if you're looking to buy Mullen stock, then please keep watching because we're going to look at the company's recent news, how's the market treating the company, and what are the technicals telling us. As the market remains volatile, we should be mindful of which positions to pick, as well as their individual timing and exposure. Before the video begins, if you would like to see more stock analysis videos like this one, please remember to like, comment, and subscribe to my channel. Over the past trading session, it appears that the share price of Mullen was able to bounce back to around 55 cents at one point, which certainly gave some moderate encouragement to retail traders. But of course, at this point, many of us are holding the bag so deep that it may or may not matter anymore. At least for me, it doesn't really matter. And also, the position size fortunately affords me the luxury of patience. It also happens to be the day, however, when the short sellers chose to close some of their positions, which makes some wonder about whether there is a possible short squeeze going on. Currently, the short interest, according to Fintel, is around 9%. Which suggests, yes, non-negligible short selling interest, but not enough to confirm any sort of short squeeze scenario. The cost of borrowing is around 40%, which suggests that, yes, it's expensive, but again, at 9%, I'm not convinced that we have a case here saying that this is it, right? Meanwhile, the existing problems and issues remain with Mullen, who still tries to address its short selling and what they believe is like a short or a stock manipulation. They're also looking to address the ongoing fundamental operations and try to convince the market that a company has operations going on, like genuine operations going on, and that it deserves to have a place on the NASDAQ and that its cars are going to be sold at least in sufficient amount to support its own cash flow needs. Some of these elements might be true, but one may argue that it's a bit late and that there is not enough positive result or catalyst to convince the market. Either way, Mullen needs to provide quite a bit more to convince the market, who so far doesn't seem to care about its fundamental news. Everyone's just waiting for the company to go through dramas in order to pick the pieces, as it seems. With that being said, let's also take a look at the technicals. The trading volume of Mullen recently, reached around 100 million shares compared to the average of 91 million shares. Over the previous 52-week period, the price fluctuated between 39 cents and $180. The market cap of Mullen is currently around $85 million compared to the enterprise value of $115 million. So, as we compare the current price to the historical price fluctuations, the stock is 0.4% higher than the 1-month low, 0.4% higher than the 3-month low, and at 0.4% higher than the 52-week low. On the options market, which gives a hint about the market sentiment on where the stock price could head next, the implied volatility is 260% compared to the historical volatility of 206%. The put-call volume ratio is currently around 0.26. Many stocks tend to have a higher put option than what they deserve, as many institutional investors hedge their long positions by buying put options. The most recent volume of options traded is around 30,000 contracts a day versus the 30-day average of 37,000. For the open interest, the most recent volume has been 1 million contracts versus the 30-day average of 1.1 million contracts. The option contracts are tools allowing traders to hedge their risk, increase their exposure with limited downside, or a revenue stream. They are derivative contracts based on the underlying security. They give traders the possibility to buy or sell the security at a predetermined strike price, which helps limiting the potential downside. The put option allows selling at the strike price, usually chosen for anticipated downturn, and the call options allow for buying at the strike price, usually chosen for anticipated bullish run. In terms of the shareholder structure, institutional shareholders own 10% of its outstanding shares. The biggest shareholders include Fidelity, BlackRock, and Susquehanna. Usually, it's best to see some institutional participation when holding a stock long-term because it offers a layer of stability and reliability in the medium to long term. It means that the market is confident that it will deliver value in the long term as well, which is an important factor to consider for the investors. Personally, I believe that the minimum threshold should be around 25 to 30% for institutional ownership. Of course, there are many exceptions to this rule, as there are always great companies mostly owned by retail traders. But it's not the case here. I think the fact that the institutional shareholders are owning about 10% of Mullen is even generous, because Mullen is not, in my eyes, a company that deserves long-term investment. So, the current short interest, like I said before, is around 9% of the total float, 57% of which coming from the dark pools. The short interest is above 15% of the total volume, and a significant portion of the short comes out of the dark pools. It may suggest that there are institutional positions taken to short the stock, which seems to be the case for Mullen. So, in the financial market, penny stocks like Mullen represent an interesting and unique niche of positions to be had. Those lowly priced stocks are known for their high retail participation, significant fluctuations, and the lack of logic in many of their movements. At the same time, the rise of interest rates, the high inflation, the specter of a recession, geopolitical instability, and the international capital's constant search for safe havens these years are some of the key factors that may also impact the current supply and demand for equities market, including for Mullen. As far as equities are concerned, interest rates do play a significant role in determining the overall direction of the market. As central banks raise interest rates, which is the case now, the yield of money does increase, which may not only affect consumer spending in general but also the market participants' behaviors. For penny stocks, it may simply mean that the expectation people have towards penny stocks changes, and that many of them could choose to avoid high-risk gambles, which can explain the overall sell-off of equities in general, but especially for the highly speculative penny stocks over the recent month. Mullen is one of the examples, but far from the only one. Of course, this phenomenon can also cause high inflation in economies that have experienced almost deflation over the past 2 decades. And this can also explain that, while the demand decreases for some, it can also renew for others. As some investors want to yield a higher return compared to the inflation that they're experiencing, which can lead to riskier decisions and moves, hoping to have a reward that is going to be higher. This may or may not work, but I want to say that it has little to no impact on the overall capital movement, since the majority of it is in the hands of institutional money managers, and the instructions they usually receive in those environments is to wait for a major price correction and to re-enter the market only when it has occurred. The fact that we're dealing with a potential recession adds an extra layer of complexity in determining whether trading those shares, like Mullen, is necessarily a decent one. Because unlike many tech unicorns, Mullen is perceived as a manufacturing and retail company. They don't have the halo of many others to afford years of losses, even though they've already had years of losses at this point. Also, if the economy doesn't do very well, it's going to have an impact on the overall demand for the electric vehicles, which for the time being, at least in North America, are considered to be an optional choice. People don't have to drive them. They're more expensive and they're more seen as luxury toys instead of a transportation tool, especially when you compare the price with combustion engines or hybrid vehicles. The geopolitical stability, whether due to conflicts, trade tensions, or other uncertainties, can also significantly impact the financial markets. In those scenarios, traders and money management tend to seek safe haven assets that are perceived as more stable than others, or more importantly, they may also seek out safe haven markets in order to safekeep the ownership or the existence of their capital at all. So in this case, they may go to American market and they may invest this into blue chip stocks. Some of them may also go into penny stocks, which are generally speaking associated with higher risks and volatility. But then again, it's a question of attribution or allocation. For penny stocks like Mullen, the combined influence of those factors may lead to heightened volatility and a fluctuating demand. When interest rates rise, traders might become more cautious and reevaluate the pertinence of their positions. The high inflation may create both opportunities and risks, with some traders attracted to penny stocks' potential gains, but others, many others, are deterred by their higher risk profile. Now, for Mullen, transparency is also a crucial element for investor confidence, and it is especially vital for penny stocks. Penny stocks often lack the same level of scrutiny and reporting requirements compared to the larger, more established companies. It's also a question of tradition, culture, and habits. Traders are naturally hesitant, or relatively more so, to invest in companies that don't provide clear and accessible information about their financial health, business strategies, and leadership. Of course, overall investors are more likely to shy away from penny stocks that lack this level of transparency because of the higher risk. The lack of clear information, especially from Mullen in recent months, leaves traders vulnerable to scams, fraudulent practices, and market manipulation. Of course, so far, these are simply sentiments. They're not confirmations as is, in a legal sense anyway. So I'm not saying that Mullen is for sure doing something shady. I'm just saying that this is the sentiment many people have. Overall, my impression is that things are not stable with Mullen at the moment, and it doesn't just mean that it may be volatile in the upcoming days, but also that the stock lacks the minimal stability for the position to last over a few days without having to change the narrative at all. This is why I believe that the current timing might be too early to enter in a position in Mullen, if at all. Nevertheless, the stock remains an interesting position to be considered, and I think that it should remain on our short list for the time being. If you want to buy it, I would recommend to commit an overall exposure of around 0.5 to 1% of your portfolio's capital.